update, a spooky morning, October 31st. And if you didn't know, next year, Halloween falls on Friday the 13th. Just saying, it's probably a better time to have Halloween on a Friday the 13th. I'm just saying, proposing it, throwing it out there. I did a whole episode yesterday afternoon on SMCI and a couple of other things. So if you want to go back and listen to that one's on Spotify. It's on all your platforms. It's on Substack, everything like that. But I'm going to fly through this because I do have my Seeking Alpha interview today that I'm doing this afternoon. And I still have to. There are a bunch of stocks that I've been researching for the Seeking Alpha interview. They had suggested I bring some stocks. So there's some new ones in there, some new ones, some oldies, some new ones. I'll be doing my elevator pitches on there. But let's talk about the economy. Look at Qs. I mean, for anybody who thought me going to the Monday Night Football game was a bad thing, I missed my flight because of TSA. They had 3 people in the busiest airport in the world checking IDs. Go and figure that. 3 freaking people on a Monday morning. I was there at 6 a.m. Flight didn't take off until 8:30. I think I got through and to the gate at about 8:35, and the flight had taken off already. So I flew standby. I made it, missed tailgating. Long story, but let's talk about the markets. So we're close to all-time highs. Again, 503 on the Qs is the all-time high. We talked about this way down here when it was in the 480s. That this was most likely going to start rising because you had confirmation the Bollinger Bands were cinched up and it was on top of the 9-day, so the 9-day had to go. You had this nice little pullback on October 23rd if you took advantage of it. Great. If you didn't, it's still not too late because remember the Bob story. He bought at the all-time highs. I don't expect next week to cause a huge downturn. Yes, there may be 5% volatility during the week. That's going to be expected to be huge. But those are opportunities. Don't let this one screw up your opportunity. Like we thought that October was going to see a nice big pullback. It hasn't. Ever since September 11th, when the algorithm got you in here at 468, it's been up. So, and most stocks have done that as well. As we've seen, we'll go over all the earnings. Microsoft, Meta, Robinhood, Carvana, Coinbase, MicroStrategy. We'll go over all of those. But as we've seen, earnings have been good. We're at that point where if it's not perfect and you don't guide higher, as we saw with AMD, you're going to get hit. And your valuation's high, you're going to get hit. So let's take a look at, first off, inflation. PCE, it's month over month. It's fine. They most likely will cut. I mean, this says nothing more than they most likely will cut. So it's a nothing burger. It was to be expected. I never kind of count on this one, but it's nice to know, hey, it's what it is. So PCE and inflation, most likely they're going to cut. The cut is after the election. Yes, I voted for the lesser of two evils yesterday, but I did put in my vote.
Hello, traders.
Like
we've all been there.
We're going to look at this one. But like I tell all of my Republican friends, just because they're freaked out over stuff, I vote on a daily basis. Because that's what liberals do. I'm not quite liberal. But I love taunting and trolling like that. Okay, Trendspider came out with this cool new tool. You can identify the best tickers in your watch list based on a strategy. You can take my entire 4-hour algorithm and go against the S&P 500, the Russell 1000. You can take whatever strategy you want and find a stock that's bullish in that strategy on a back testing basis. This is huge. I want you to go watch this video. And then once you watch this video, if you don't have Trendspider, go to the link tree, linktr.ee/daily stock pick, and you use this top link, Trendspider, smart charts, real-time scanners. You'll get to a page and you can see the pricing for $53 a month. This tool with my algos, the 65-minute, you can sit down and find a stock. Say you're engaged and it's a Monday morning, you took off from work and you're like, I want to trade at 6 a.m. Go and scan using the 65-minute algorithm. Get ready for the market open because that's the way you do it. And it's just, you may not even know. I saw a quote from somebody, and I forget who it was. Technical traders don't care about the PE. They don't care about the fundamentals whatsoever. They trade what the market gives them. And I say this a lot. The only thing that matters in a stock is the price. So if you're using a chart like we see on Trendspider here, and you're using it with a strategy like the 4-hour algorithm, you want to make sure that you're at least making money, if not beating buy and hold. Now, my 4-hour algorithm on just QQQ over 24 months, it makes you 81%. It's 17 positions. So you're not even trading once a month. So it's not like you have to be all in. You can set up alerts for when it gets you in and out. You can get a text on your phone. That's the great part of Trendspider. And this video right here will give you another tool that you're able to do. It is phenomenal program. And Dan, the CEO, has basically teased us on Twitter and said the new AI stuff that they're coming out with is game changing. And if you didn't know it, with the strategy tester, you can build a strategy using ChatGPT. It's fantastic. Go to YouTube and go to the Trendspider. Go to the Trendspider page, and you'll see this one is the lead video. But again, go and watch any of them. Now let's talk about the markets. The biggest stock markets mover of the day, Carvana. I mean, we'll go over all these earnings. I can't believe it is what it is. But it's up 20%. Etsy's up 8%. I've been out of that one. I got out with a huge loss, but I got out of it. It's still not in an upward trend. I would argue that this one was a trade around earnings, and if it's up 8%, take your profits. But I'm just a douche on the internet. Biggest losers, Microsoft slid 4%, Meta slid 4%, Roku slid 14%. We're going to go over all of these earnings, okay? Because there's reasons why these slid. But we're going to go over all of them. First, Meta. This is one that I've been saying, hey, you should buy it under $600 because you can. It's at $583. It has already started to come back. If we look at a 5-minute chart, okay, during the after hours, you can see yesterday afternoon in the dark black right here, you can see it slips down, and we traded down into the close, and you traded down after earnings as well. The reason? They're forecasting rising infrastructure expenses through next year. That's crazy. And he's spending so much money. Again, he found something where they're making money and he loves spending money. So he's going to spend a ton of money. Algorithm got you in at 580. You're trading at around 584. So algorithm's not going to get you out. It would have in the after hours because I think you traded all the way down to 570. Get it before it goes over 600. There is nothing wrong with their actual business other than the spending. That's it. The note that I have, shares slipped 3% after the company reported better than expected results, but forecast rising infrastructure expenses. Although digital advertising backdrop remains healthy, the significant capital expenditure growth in 2025 has investors concerned. Don't worry about it. They were concerned during this earnings. Okay, they were concerned during this earnings where it gapped down all the way to 450. How'd that treat you when you got in here at 445? Now, you may say, well, I don't know what your algorithm does. My algorithm makes you 315%. So if you're nervous about buying it at these all-time high, again, it backtests. It doesn't guarantee you 315% over the next 24 months, but the fundamentals on Meta are what they are. It's a good business. They print cash. He's just spending a ton of money. That's it. That's it. And if you want to see the seasonality of this thing, you can actually do the seasonality. I'm not going to do it right now, but you can do the seasonality just in election years. We'll go back to 2012 when it IPO'd. Look at November. 67% with a mean, let me see what this, mean change of 4.97%. You don't think this one's going to go up? You're crazy. Microsoft. Let's talk about Microsoft. Shares slid 4% despite beating averages and revenues from Azure and other cloud services rising 33%. The company's guidance for revenue growth this quarter implies a 10.6% growth, just below analyst estimates. Like Meta, the company's AI investment remains a key focus for investors who are closely watching capital expenditures. It's about the spending. That's all this is. They didn't do as good a job as Google at monetizing AI. And they didn't say, we're going to cut back spending like Google did. Do I think this is a bad investment? No. I think you buy it between 400 and 450. Do I think it's pulling back to this? What's that green line? That's a trend line. You can trade on just a trend line. That comes from this weekly chart. And it anchors back here, January 2023, when it really started its upturn. Okay, yeah, we could change that trend line to up here, but that's not realistic because we're down here. If it uses that trend line as support, then you're just going to go back to 425. And where you're trading now, 417. So I think if you close above 420 today, I think you're fine. Again, 430 is kind of the middle. That's where this middle line is. And where'd that come from? Look, it just came from here. Back in March, you used that as resistance, use that as resistance, use that as a resistance. And now, yeah, it's gone right past it again. I think you can buy this between 400 and 430 and be completely fine for the long term. Again, it's just the spending. That's part of the biggest movers. Those are the two. We'll go over Carvana in a little bit. Robinhood, it's a shit show. Robinhood is what it is. Shares fell 11% after its earnings revenue missed expectations. Revenues jumped 41% year over year, its second highest quarter. Net interest revenue rose less than anticipated, but transaction-based revenue rose 72% year over year. $319 million as it continued to invest in higher fees. It's paying users to come over. It's a cost basis. And so when I look at Robinhood, okay, let's just look at the valuation. What are you paying? You're paying 27 times forward earnings for what is a bank. I mean, what is a bank? Interactive Brokers. Let's look at this one. Interactive Brokers, IBKR. That's a same business. You're paying 22 times. I'd argue these are banks. Why not just buy Bank of America? I mean, it's a different total business and the growth is different, but this is 13 times forward earnings. You know, JP Morgan, which is a great bank, 12 times earnings. You know, shitty bank, which we talk about, 10 times forward earnings. So I just think that Robinhood, it's a crappy company. Because if you didn't know, go back and look at the GameStop crap. They're not out of my bad book with that one. I still think that they have bad management for that one. But you can make money trading this one. Absolutely. I mean, this is a high flyer. This is a retail name. They love trading it. Look at this. The algorithm makes you 227% over the last 24 months. Versus, you may say buy and hold does great. It makes you 177%. The algorithm had you in here at 49. You're trading in pre-market at 25. Okay? That's a 9% pullback. Algorithm doesn't have you out, but most likely it will. It is a bit extended. I would have argued there is no way that they're paying the amount that they do, matching for all of the stuff that they're bringing in, that they're going to make money. I just didn't see it. And I don't like the company. Full disclosure, I don't like the company. If you want to trade something on an app, okay, it's the fifth link down right here. Join Webull today. Get free stocks. I put $1,000 in there 2 years. It's $10,000 today. Well, it's not 10,000. It's like 9,700, somewhere near 10,000. So, but again, I would argue that's just a shit company. Coinbase slipped after missing revenue. Coinbase is one. Now, this is crypto. I love that, crypto. It's down 2%. It was down 3%. But this one, again, when you look at the chart, it was extended. And you have to understand the crypto business that Coinbase is in. As I buy IBIT, Coinbase houses that Bitcoin that I buy in IBIT. But they're not making money off of me with the fees. So they're housing money and they're making money off of that ETF with housing their Bitcoin there. But again, if I'm a crypto investor and I wanted to buy in my retirement account, I need to do it through IBIT. I need to do it through that stuff. As Fidelity gets in, Coinbase has competition. Coinbase is still going to be the king of it all. But you're going to see that multiple come down. Now, the 200 days fallen down. My algorithm makes you 208%. Buying and holding makes you 223. That's great. I mean, again, you might beat buy and hold. But I'd argue the safety of a volatile name like this, I'd like the algorithm to give me some guidance. So Coinbase dipped 5% after muted crypto trading caused revenues and their earnings to miss analyst estimates. Within its core business, retail trading revenue grew 98% year over year, while institutional revenue jumped 292%. So that's a good business to be in. Just probably better to be in MicroStrategy. RIOT platforms. RIOT shares fell 7% after the crypto miner reported wider than expected third quarter loss. However, revenue fell short of estimates. While it produced virtually the same amount of Bitcoin year over year, it had to spend more. The miners were the Bitcoin play. I don't know that miners, unless Mara is the big one. And that one may be one that you want to trade. But RIOT on here, on the 4-hour algorithm, again, I'm going back and forth to show you this. It got you in at 774. Where are you trading right now? 1006. So that 3% pullback that you see on earnings, it's not even affecting you because the algorithm still has you in. The algorithm makes you 245% over 24 months. Buying and holding only makes you 76%. Again, when you can time this nice thing, you've got a golden cross coming here. I think crypto is strong. I think things like this are good to trade. MicroStrategy. Okay, that's Michael Saylor right there. This is the guy who's never selling Bitcoin. Slid after a wider than feared Q3 loss, announced a $42 billion capital plan to buy Bitcoin. This is why you get into MicroStrategy, because the guy is just looking for ways to buy more Bitcoin. And as it slid, it's come back. It's going to open positive today. Okay? I got a social question that we'll go into, but I'll bring it up now. Should you be trimming? No. The decision for me, and whether you follow this or not, it's up to you. But the decision to get into MicroStrategy for me was a simple one. It's based on my algorithm performing so well. Over 24 months, it's only 22 positions. So you're trading once a month. Okay? It has you in here at 125. What's double 125? 250. Where are you trading right now? 248. There's my New York coming out. So this announcing a $42 billion capital plan to buy more Bitcoin and it gapped down 6.6%, that was a buy the dip. Because the algorithm has you in. I trust the algorithm on this one. In my mind, I'm trading it. So MicroStrategy, tech company turned Bitcoin betting vehicle, reported results today. But the star news was that it plans to raise $42 billion to buy more Bitcoin over the next 3 years. I mean, you want to talk about a degenerate? Let's make this guy the poster child. But he's a billionaire. And he's done super well. Whether its capital structure can support that level of funding remains to be seen. So just understand what he does. He takes the company MicroStrategy with its pretty solid, software as a service revenue, and he leverages that to get loans to buy Bitcoin. And he gets low interest loans to buy Bitcoin. And so as Bitcoin dips back, there's always the danger that he's going to get called out on those loans and have to sell the Bitcoin in order to pay those loans off. So it's just a hedging bet. That's why it's a leveraged ETF against Bitcoin. But he's done it really, really well. So Etsy jumped 7%. I'm not even going to look at it because I'm out of it. Well, I am going to look at it just for the people that may be into this one. Again, it's at $51. So if you want to trade in a stock like this, that maybe pumps up to $51, great. Have at it. For me, that's a long-term bottom upper left to bottom right. I'm not interested in it until that 50-day starts to turn and that 200-day comes within range. I just don't want it. I just don't want it. Now, one that I have missed, and honestly, I don't understand at all, is Carvana. I mean, do you really want to put a freaking coin? They're making on average $6,000 per vehicle. $6,000 gain per vehicle. That to trade. Now, I traded in my Tesla. I think I got $22,000 for my Tesla. They put it on the lot for $25,000. I don't know that they sold it for $25,000, but race higher on another record-setting quarter. Let's see. Carvana shares soared 22% after the online used car retailer topped earnings. Management also raised its 2024 EBITDA guidance, saying it will be significantly above the high end of its previous $1.2 billion target. It expects a quarter-over-quarter increase in vehicle sales during the fourth quarter. The consumer is strong. I would argue the valuation makes no sense. None. 309 times forward earnings, no sense. But the strongest thing in the market is momentum. And over 1 year, you are up 653% in this name. The actual chart is crazy. But if you're a technical trader and you don't care about the actual fundamentals, this is a stock that you want to be in. Because look at that bullish run. Now, if you go to a weekly, this is what you'd like Etsy to look like. Is at the bottom there, and then you have an upward trajectory. And you're just getting the golden cross. Okay? If you're a technical trader, you're just getting the golden cross. Now, over 24 months, you're up 1,454% on a back testing strategy, okay? The strategy makes you 1,368% on 24 positions once a month. So again, this one, great stock. I don't see it. I don't like the fundamentals. I would just, I would argue that this one's just nuts. Now, RIOT, I am going to open up this article that I found on RIOT. This one's crazy because RIOT, right here. There we go. RIOT Q3 earnings, they blew it away. Now, this is an article from October 24th. So 7 days ago, the Seeking Alpha analyst said sell. Okay. He said sell back here. It's up 138% since then. He said here, it's up 40-something% today. Let's see what it is up in pre-market. Now, I'm sorry, it's up 92%. I was undervaluing this. It's up 92% today. And what's interesting about this one is when you look at the chart, okay? Because I want to bring up this chart that you're just kind of floundering here between 9 and 31. When you look at a weekly, look at that one coming down. This is what you want to see a chart do. When it comes down here, you want to see that 50-day moving positive. You want to see the 200-day moving positive. I would not have gotten into this one, but the ironic thing is, here at 30, where does it go to? Today, right now, it's trading at, let's see, it is trading at 78. That, if we go to $78, there's going to be an interesting thing here when you go to $78. Because what do you see at 78? You see that nice little double top right there at about $80. The chart is the chart. Now, my algorithm over 24 months makes you 1,268%. Again, RIOT is not something that I would ever go into. It's a crazy one. Stock skyrose 70% after the auto insurance technology company turned a surprise profit for the first time. This is what profits do for you. Revenue nearly doubled from the prior year to $305 million, with its gross combined ratio improved to 89%. Policies in force rose 57% year over year, and gross premiums written rose 48%. It's a small cap. This is a market cap of $607 million. Okay? Wall Street says it's a buy. 6 analysts. Their average price target was 71. They're right on target. They are right on target. It was trading for $40 yesterday. Okay? This is a crazy one. That's nuts. Let's see. eBay sunk 7% after the online video. Wingstop slipped 21% yesterday. Okay? Wingstop has been a high flyer. And we can see the summary here. Wingstop, look at this one. Over 1 year, you're up 62%. Year to date, you're up 13%. Over 5 years, you're up 241%. This has been a high flyer. And it's actually in pre-market, it's up 1% now. But Wingstop slipped 21%. Oh, that was yesterday. Okay, yesterday it slipped 21%. It's up 1% today because it's back there. What does Wall Street think the average price target is? $3.95, 36% upside. They missed revenue marginally beating. Same restaurant sales rose 20% in the U.S. and driven by transaction growth. Still, investors feel the growth stock's momentum may be waning. I don't know. I mean, 3-month performance. Again, momentum is a strong force in this market. Garmin rose 23% to all-time highs. Dropbox shares popped 2%. Pre-market earnings today, you had Norwegian, Uber. Uber's one that I want to talk about. Uber, it was a good quarter, but they kind of guided lower. And I saw the CEO on, he was great on CNBC, and he said the quarter is the quarter. I still think this is an $80 stock. I mean, we can take a look at the chart, but I still maintain that this is an $80 stock. I hold it. It is a alpha pick. So Wall Street analysts right here, you can see they have it as a buy. Average price target, $88. We might start to see that come down. But again, Uber, in my mind, it's in the core portfolio. It's not one that you throw out with the baby with the bathwater, but the algorithm makes you 71%. Okay, algorithm got you out with a 3% gain. That was an iffy. I've said when you get up to this $80 level, if you're feeling queasy about it and it's not a long-term buy and hold, I would at least get to a year so that you have capital gains that are lower. But if you're in a retirement account, I think between, the 200-day at 73 and $80, it's holding on to the 200-day. Okay, you're gonna use that 200-day as support. Its actual valuation, crazy. 35 times earnings. But remember, we were looking at ones that are 50 times earnings. Costco is 50 times forward earnings. Your PEG ratio going for 0.75. There's nothing there. So, I like this one. I really, really do like it. Now, let's talk about SMCI. This is a stock spotlight. What's next for SMCI? Because I went over it yesterday. It's continued its way down. And I went over it, but with the trend line that I told you provided some support. We're breaking that now. In pre-market, you're down to 31.45. You're down 5%. 31.45 will bring you below this trend line. Okay, we're going to just put this up here. 31.45 brings you below this red line. That's not good. Not good at all. And this article goes over everything. What's next and why this all happened. This is a great, if you're into SMCI or you're thinking about it, read this article. And I would argue there's no reason to go long into this one. Buy Dell. I would argue it. I've been proven wrong before, but I really think you don't go long on SMCI. I just don't like the company. I don't like what those auditors said. I don't trust the company after this. I think they're going to get delisted. I just don't think there's a lot of positive in this, and the risk reward is just not worth it. Could it pop to 80 on their earnings? Yeah, but don't expect them to release earnings on November 12th. Don't expect that, because they need an auditor to actually audit and to come up with those earnings. So don't expect it to pop on that one. I just don't think that's not an overreaction in the stock price. I think that's a real reaction. Now, you want to know what was perfect? Roblox. What did I tell you about Roblox? Buy it under 40. And that the short sellers report was going to be debunked. Again, if you're a paid newsletter subscriber, we can just go to this weekend's paid newsletter. A preview of earnings. And yes, it's a video. Daily stock pick trading podcast. I don't want to go through that. But what did I say? Let's go down. Ford. I was wrong about Ford. My take on Ford. PayPal. I was right about PayPal. My take, SoFi. I was right about SoFi. McDonald's, I said, do not get into that one. Google, I said, absolutely, you should get into that one. AMD, I said, it's going to be a little bit of a, iffy one. Wednesday, Eli Lilly, I said, just buy it. I was wrong on that one. But if you bought the dip, kudos to you. Microsoft, I said, just buy it. Meta, I said, just buy it. Instacart, I said, just buy it. MicroStrategy, I said, you're fine just buying it. Look at that one. Roblox for the short seller report. That's what I said. And I should have done it yesterday, but I just didn't do it. Did you buy it? Because it's up 21% in pre-market. It is broken through that 44. And if we go and look at this one, if we go and look at that weekly, where is it trading at? 52. Where would 52 put you? Up here. Let's see. We're going to put a little line over there. I didn't hit it. Boy, pausing for dramatic effect didn't work. Look, you're breaking out of this long-term trend. You're breaking out of the long-term trend. Roblox killed it. Earnings per share beats by 1 cent. I mean, again, they're losing money. Bookings of 1.13 billion beat by $110 million. 29% revenue growth year over year. Average daily users were up 27% year over year. This is kind of like, Snap. It's kind of like those programs. So I like this one. I like it a lot. A great question from a Substack user, Alex, on my $25,000 or $50,000 buy of AlphaPix. This one right here. That portfolio. I did a $25,000 buy of AlphaPix. Let me see all, and you can read about it. I mean, I put it in there, why I bought it, how I did it, the whole process, what AlphaPix return is. And if you don't know about AlphaPix, you can sign up for AlphaPix with this fourth link down here, or you can bundle up. You've seen me use Seeking Alpha Premium with the quant and the valuation settings and all of that. It commercial free, ad free. It just saves you time. And saving $159 off the regular price, this is the bundle. And why do you want AlphaPix? If you're an AlphaPix person, I'm a guy who's done my own portfolio. I've beaten the S&P. I don't understand it, but I've done it. I'm just not that smart. But again, I've beaten it. So I have problems turning over a portfolio. AlphaPix, its portfolio performance of 155% against the S&P at 53% over that same time period. I said, why not buy it? And so in that newsletter, Alex asked, how are you going to manage new picks 2 times a month? Do you sell or redistribute your earnings, or do you buy with new money? Great question, Alex. Fantastic question. So in AlphaPix, they give you a bunch of different strategies as to how you should do it. I think it's inside, the thing. The picks are selected by the team. What should you expect? It's a great one for anybody who doesn't really know fundamental analysis, because they give you a great analysis each month. But I told Alex, I said, I buy with new money. It's a great question. It is a buy and hold portfolio. So the assumption is that you're adding to this portfolio like a dollar cost average would, but you're adding it to new stocks, diversifying yourself. And when you sell the stocks, that money can go back into the next buy. So it's just managing a portfolio and not necessarily managing a cash position, but you will need to add new cash to it. So say you've got, $100,000 in a retirement account and you want to, do the AlphaPix portfolio. Do not put all $100,000 into the portfolio. I would probably put, if I had $100,000, I would probably put about $40,000 into AlphaPix. And I'd do the other $60,000 the way that I want it, because then you have some cash when the new picks come in. You have some cash to actually do it, to actually buy the new ones. And they're gonna have to. They took Supermicro out, so they're gonna have to redo this picture, by the way. But I do feel comfortable with the team at AlphaPix that I met, and I have an interview with Steve Kress on my YouTube channel that you can go watch, and I'll put it in the newsletter as well. But AlphaPix is just a portfolio that is fantastic. If you don't want premium and you just want AlphaPix, I have that. If you just want premium and you don't want AlphaPix, I have that as well. You can save, this is the Seeking Alpha Premium, $30 off your membership. Free 7-day trial on that one. Okay, AlphaPix doesn't give you a free 7-day trial because you're going to take the portfolio and sign up for a free 7-day trial. So they're not going to give you a free 7-day trial of that one. But if you just want AlphaPix, you can save $50 off of that as well. So again, the tools are there. Great question, Alex. I like that. I probably left that out. I probably should have included that in that newsletter. What are your thoughts on DoorDash? I love the service, to be honest with you. As a guy who works in a stadium a lot with MLS, I'm stuck, so I like the fact that they'll deliver. The stock is a bit of a different story. Now, my algorithm makes you 153%. Buying and holding makes you 249%. So I can't argue that it's not a great investment so far over 2 years because you're up that much. My problem is the valuation. And the valuation, you're paying 50 times earnings for something like this. You're really paying for the growth. So the PEG ratio is at 1.09. And your revenue growth is 23% going forward, year over year. Profitability, they have a 48% profit margin. I like it. When you look at the valuation of this one, the levered free cash flow, let's see, that's under growth. Levered free cash flow, 84%. So again, I can't argue with it. I'd argue it might be a little bit stretched with the analysts bringing their estimates down. 19 have brought their earnings per share down. 0 have brought the revenue down. I think they're killing it on revenue. It's just going to be their earnings per share. The quant has it as a hold. And it's been, a hold since, let's say, 150, and it's trading at 155. The average Wall Street price target is 157. So you're thinking about 1% upside. I just, again, I think the algorithm protects you in this one. It got you in at 130. Their earnings are coming out. I guess they came out yesterday. I don't see I see a 5% pop on this one. This is one of those where I think it's easily, Toast is a competitor without the delivery. So Toast is one that, goes into the restaurant. If you're a restaurant owner and you do DoorDash, you have to use their platform. You have to raise your prices, blah, blah, blah. There's a lot of stuff there. But Toast is a competitor where they just go in, create the website, and you don't have to do the delivery service. So I think it's just an easily copyable model. But again, for me, I like Uber more than DoorDash. But what do you think of Monster stock, MNST? This is from MNST. This is from Spotify. I will not repeat your actual name, but what do you think of Monster? From that name, I would expect you to be a big Monster drinker. By the way, stop drinking this shit. I mean, really, come on, get a little bit better a hold of your health. It's a drink I like. And I've made some profit trading it, but wondering if it's worth compared to other major stocks. So Monster is a stock that had a big run up and it pulled back to the 200-day just based on valuation, I think. I think this is similar to Celsius that just got a little bit out of hand, and it had that run up to 60 and it's at 52. So it hasn't had a huge pullback. You can see on this day, it had a huge volume. I don't know what happened on June 3rd, but you can take a look at it. Now, I'm not a fan of this. Honest to God, I just don't like the drink. I don't like what it stands for. I'm just not a fan of this type of stock. I do own Pepsi, which I think owns Monster or distributes Monster. They have some tie-in with Monster. And I own Coke. And so for me, that's a better investment. The valuation of this one, an absolute F, 31 times earnings for a drink company. And their PEG ratio, 2.53. Can't argue with the growth, 10%, whereas the sector's growing 2%. That's good profitability, 53%. I mean, profit margin is fantastic. The momentum sucks. So what do I'm not sure what you like about it other than the drink. If you do drink it, I would probably own it. It's not a bad, it's a little bit oversold here. So, but I don't know what the earnings come about, because this sector isn't one that I care to be in, but I own Pepsi and Coke. That's just kind of my thing. From email, Charles asked me, what are your thoughts on MicroStrategy? Is it time to trim back? That's up to you. I'm following the 4-hour algorithm, Charles. I hope you have the 4-hour algorithm, because then just set up an alert for when to sell. I set up an alert when to buy. You see those blue lines right there? That's when I got a text. Add to your position. Add to your position. Add to it. That's what those blue lines mean. And I get a text. When it's time to trim, I will get a text. And there'll be a line there. So MicroStrategy is, if you believe in Michael Saylor taking out loans to buy Bitcoin and hedge against those earnings of the software company, this is a simple strategy. And the algorithm makes you 1,606% over 24 months with 22 positions. Your win rate is 50%. Your average win is 49.75. You're 100% on this one so far. You got out here with a 241% gain. There's been some losses here. There have been some losses. Have I gotten out? Nope. When it's time to sell, I'll sell. But I don't think these sells right now are times to sell. I did put in the newsletter a chart comparing Bitcoin to MicroStrategy and how MicroStrategy is outperforming. You might want to go look at that one. By the way, Roblox is up 24% to 53. Just so you know, it is by far the largest gainer in the core portfolio. So hopefully you got into that one. I did not. It's not, I don't have kids. Let's go over some scans here. AVGO. This is Broadcom. News that OpenAI may be using Broadcom to make their chips. Algorithm gets you in at 177. Now, do I think you should get into this one at 177? I don't think it's a bad play, but you have to realize it is expensive. I bought in at 130. I am perfectly happy with my 130 buy. I'm not adding to this one. The PEG ratio, 1.85. If they do start making chips with OpenAI, that's going to be a new market that they've tapped into, which is, hey, partners, OpenAI partners with Broadcom to build chips. That's the report. So the OpenAI is not a public company, so they don't have to say anything. So Broadcom and Taiwan Semi. There's a reason Taiwan Semi is in the core portfolio. So I like Broadcom. Just gets you in. What does the algorithm do? Makes you 98% over 24 months. 25 positions. So it's once a month. Buying and holding makes you 288. So I looked to this one as an entry. Okay? I looked at this one as an entry. I think I bought back here in May sometime. I think my average price is around 136, 140, somewhere in that neighborhood. I may have bought right here during this earnings time period when they gapped up. Right now, you're seeing that leg down, but you're on an upward trajectory right now. If we go to a weekly and we look at this one, look at that upward trajectory right there. So I'm going to do something very simple in Trendspider, which is a support line. And I'm going to anchor it right here on October 10, 2022 at the lows. And I'm going to say, see how it's automatically just there for you? I'm going to put that and touch at least 2 points. And so that trend line right there, I think that's probably about where it is. You can see if you're on this trend line, if you break the trend line, maybe you want to trim. But I would argue you want buy and hold. Now, there's some other ones. DraftKings is on our watch list. This got a buy in here at 36 right before earnings. I mean, the algorithm makes you 205% on this one versus 180% buy and hold. I would argue this one is in a range for the weekly. And what's it using as support? It's using the 200-day. So I would put your stop loss in. If you buy it here, I would put a stop loss in at 32.60 because that's where the 200-day is. Put a stop loss in. You can always buy it back. But that golden cross right there, I would argue this one's looking good. Look at that MACD resetting itself. Look at the RSI down at 48. I like this one. Okay, IWM got a cross up and an entry. Affirm, which I've said, trade between this one. They're reporting on November 7th. They get an entry at 46. If we look at the weekly on this one, you can see, where did I get that one? Well, I got this one from a previous candle high on this one where it broke through and it didn't come through. But you're seeing between 39 and 51. So buying at 45 on a firm, I don't think that's a bad one. Again, it's just a play. An alpha pick that I like, that I currently own because I bought the whole thing, Royal Caribbean. They already announced earnings. You got in at 165. It's telling you to buy again. The RSI is a little high. I bought up here. Long term, I'm perfectly fine with that one. We've got TAC, which is a Trans Alta. I found this one. I think it was with one of the nuclear ones or something. Let's see what TAC is. I think this is the top. Let's see. Utilities. Yeah, I found this with the VST. VST, which is the top performer in the S&P. This is one that I like a little better. And the reason is the valuation is reasonable. Okay, TAC. We got an entry here at 1051. The MACD is reset right before earnings. This one, you go and look at a weekly basis. It's one of those that's turning around. I'd argue that even if you get up to this 1179, that's a great percentage move for you. But I'd argue that that's probably the top. If we look at TAC and we go to Wall Street, there are 9 analysts that follow this, and they have a price target. They don't have a price target. So, well, yeah. TAC, $10, and let's see, price target, $8.99. Price target is $8.99. But this is a small, understand, this is just a small, at $3 billion market cap. Am I getting into this one? I might. It's interesting. I found it. So I'm going to bring that one up. There's a bunch of others that I'll let you do. Go and subscribe to the newsletter. The newsletter is free and you get all these scans. You get everything. If you're a paid subscriber, you get the support of the commercial free stuff. I am going to go live today again at 4:00. So for Apple and Amazon, if you're interested, join me. Okay, that's it. I will talk to you tomorrow. See you.
Every morning I wake up to the sound of the trading bell. My heart starts to pound.